Hello and welcome everybody to the first episode of the Oreninc podcast in the new year of 2018. I'm joined here in Vancouver by Mickey Fulp today, Mercenary Geologist. You all know him by now. You better do at least. And we're sitting here at the convention center. It's 4 p.m. in the afternoon, and we've been busy at Roundup and the Vancouver Resource Investment Conference over the last few days. And we're going to talk a little bit about what we've seen here, but also the market sentiment, especially with gold touching 1360 and showing some very strong momentum right now. I'm going to start us off as always. Oh, no, wait. Hello, Mickey. Thanks for joining us again. Just like I have to.
Hi, Guy.
We do that. You got to it's like autism. We got to just have to do that every time. So I'm going to start us off talking about the markets real quick. I gave a presentation at the conference on Sunday at 11:40 p.m. and I think it has been taped. So if you want to watch that, we've talked about the markets in 2017, how much money has been raised, and the market momentum coming into 2018. And just to sum it up real quick, right now it looks very grimace in terms of the financing environment right now, at least. And what we've seen in the fourth quarter, actually, 2017, it was really busy. So the money was spent in Q4, and we're predicting we're going to see a fairly quiet Q1 because all the flow-through financings have been done last quarter. And just overall, like we've seen only one deal touch close to $100 million so far this year. It was an oil and gas deal, which screws up the numbers just a little bit. But so far, I think only $60 million have been raised, and that's as per January 12th. And our index started off really slow this year. We've had 3 weeks of roughly a 40-point score, while we've seen early December probably a new record high at 123 with all the financings, a lot of broker participation, bought deals, and
Flow-through financing, not real money.
No, like if you want to take that out. But it was still, I think it was $385 million, and it was just insane in the fourth quarter, and people have been working till the last day of 2017. So, and instead of walking away on the 15th and coming back on the 15th. So
Yeah, so my opinion was on that would be all these flow-through financings came in because people didn't have enough tax losses to burn off profits. And so they raised flow-through to generate some tax losses for 2017. And
no, well,
that is strictly the Canadian market. So a lot of companies operate outside of Canada, and that money is basically irrelevant to those companies.
That is true. That is true. What we've seen, though, as well, and what I've noticed, it all happened in the second week of December. So is that smart money? Have they been waiting for the tax law?
Money.
Yeah, but have they been exactly? Have they been waiting for the end of the tax law season to position themselves, or is it just purely timing because they sold off until then and then they came back?
Well, I think really probably they had profits and they realized they didn't have enough losses to burn profits. So the out for Canadians was flow-through financing at the end of the year. And also at that time, the crypto, and the lithium stocks were rolling. Those have all taken a dive now. We've seen that in the Venture Exchange Index. After the first week of the year, we touched 940, and we dropped all the way back down to about 870, 880. We've seen a little gain this week, but I think that downturn with those what I view as speculative bubbles has been good because that's going to bring more investors to mining space. Gold today, as you mentioned, touched 1360. Zinc hit a 10-year high, plus 10-year high, 10.5-year high of $1.57. Lead closed the day at almost 120 for a 6.5-year high. Copper had a very interesting 3 days. It went from 319 on Friday to 311 on Monday, Tuesday, and today it jumped right back up to 322. Oil touched $66 today for the first time since December of 2014. And that's all on the back of a U.S. dollar, which went below 90 and is pushing the low 89 range, which is also a low since December of 2014.
So all the fundamentals are there. Why isn't uranium moving?
because there's a oversupply of uranium that's still being worked off, and it does not trade on world markets. We're only talking about things that have world exchanges priced in U.S. dollars and have futures and options markets.
So I was going to point out that we're still sitting at $23 there for the uranium price.
Yeah.
No. What have you seen at the conference? Like, what was the feeling like?
Well, I was so busy at the conference running in and out from speaking events to videos to interviews. But the Vancouver Resource Investment Conference was sold out. They turned back exhibitors because they didn't have enough space. 320 companies, something above 8,000 in attendance. So this is really the first big uptick we've seen in exhibitors and attendees since the downturn. So I can't really comment on the mood on the floor because I really wasn't on the floor. When I was on my way to a meeting or an interview.
No, it was really buzzing. Like, and after what we've seen, the aisles were full. Like the presentation rooms were full, the aisles were full. It was busy, and it was really exciting to see that and see a lot of investors come back. A lot of old familiar faces though, so we're still missing the younger generation, or it seemed like the younger generation, the millennials walking the aisles. Maybe they just get their information
I think
otherwise.
They're starting. I think I've seen a greater percentage of the younger generation, and that makes sense because. Let's hope they make money on their cryptos and they get out before this bubble bursts too much. I mean, Bitcoin, I haven't looked at Bitcoin since last week, but it had gone from a high just below 20,000, I think 19,600 or something like that. And last week it was down into the $11,000 range, which is so it's 179 as we speak right now, and that's about that's more than a 40% haircut, which is very predictable. We knew that was going to happen. How low will it go? We don't really know, but let's hope people were not too greedy to take profits, and as these kind of bubble stocks without what I consider to be a lot of fundamentals in some instances come off, that people will flow back into the metals industry, because I am absolutely convinced now that we are on the verge of a big bull market for all commodities. And even people like Goldman Sachs are agreeing with me now.
Oh, that's getting scary now. Maybe we're at the end again. No, but you're absolutely right.
No, it just means they're long on commodities nothing wrong with that.
No, but you're exactly right. So I hope the young generation, and with gold, and which is obviously the most visible metal or out there, touching 1360 and showing really strong fundamentals right now with a weak U.S. dollar as well, is attracting some of that money at least back into the market.
And we got to remember, this is the best season for gold. From mid-December, late December to the end of February is historically the biggest run-up in gold during the calendar year.
No, let's hope it's sustainable. We'll see how it goes at PDAC, and I'm going to go look at all the stocks I've recommended in Germany in my newsletter at the Investor Magazine on the end of February, the last issue of February, and reevaluate, because we've made some recommendations, just trades for the first 8 weeks or 10 weeks of the year. So, Mickey, thanks again for joining me here in Vancouver. It's been rainy all week. It's going to continue to be rainy, but it's snowing on the mountains, I hear.
Welcome to Vancouver in the wintertime.
Oh, it's beautiful still. So I appreciate you taking the time as always. And stay tuned for the next episode in a few days.
All right. Thanks, Guy.